A lot of questions right now as to whether we're going to see those corporate fundamentals catch up with multiples.
Romaine, great question. Thank you so much for having us. It's an honor. So many people are focused on what happened in the first half, I think, because most investors, quite frankly, missed it. We know a lot of strategists and economists missed it, and so they're either trying to play catch up or trying to come up with new ways and increased ways to be bearish. So I think the key thing to always remember is that stocks lead earnings, which lead the economy. The stock market told you last year that we were going to have some sort of a slowdown given its pullback of 27%. Now earnings have slowed, not to the tune of as negative as everybody thinks. And last time I checked, in my 30-plus years of doing this in the business, nobody buys or sells stocks based on quarterly earnings. And so I think we're now kind of digging up some things on a near-term basis that would make most people nervous. With respect to revisions, if you take a look at longer-term revisions, meaning 2024 versus 2023, earnings revisions bottomed 2 or 3 months ago. And longer-term investors look at what's happening on an annual basis, not on a quarterly basis. So I think we're kind of splitting hairs a little bit on a near-term basis with respect to earnings.
When you talk about sort of the support from economic conditions, Brian, do you see that support there?
You know, this confounds me, Romaine, because the investment marketplace, wants bad news. And when is it bad that the economy is doing well? When is it bad that people have jobs? When is it bad that people are spending money? And now we're kind of poking holes on the majority of jobs are coming from the service side of things. We're going to continue to poke at holes until this bull market begins to reverse and go a lot lower. Then maybe we'll start to see some of the macro stuff come through. Remember, stocks lead earnings, which lead the economy. You don't buy macro data, you buy stocks. And stocks to us continue to look very attractive from a longer-term perspective. That's why 6 weeks ago we upped our price target on the S&P 500 from 4,300 to 4,550 at year-end. It's not a barnstorming bullish call. I do think returns will be rather muted relative to the first half of the year, but we do think that positive returns continue. And oh, by the way, I hope I'm wrong. I hope I'm wrong in that earnings come in a lot faster the second half of the year than even what we're anticipating, and we'll have to up our market target again to our bull case, which is 50-50 for year end.